Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, if you didn't watch last night's webcast, you can catch up on that. We talked a little bit about how this thing is trading. We're stuck between the green line, which is your 20-day simple moving average or middle Bollinger Band there in the daily chart, and the red line down below, which is your 50-day exponential moving average. Monthly pivot was down there as well, 43, 47. That was basically the lows of the week. It migrated between those two lines yesterday. The Bears didn't have a very good time of it. I mean, they really gave it up, and there was a real opportunity by the Bulls to be able to take out 15 to 17 and really make a run at it to the upside. But, last night's video, and we alluded to this in the morning, you can't sell a rally without a rally. Now, as we go to the hourly chart, that's a lot of opportunities to take out the daily midband. And what you've done is you've had a little downside market pop. Rips are violent, they're vicious. You can be long those rallies or you can step aside. That's all you can really do. You can't fight them short because you'll get your head taken off. You have a lot of inability. Now remember, this is an hourly chart, so you've got a few hours of trying to take it out. They took it back here in the middle of the afternoon. They printed 77.75, another lower high. Overnight, we went and did 71.75, but what we had here was just a lot of violence, a lot of whip in and around the 4,400 area. They've taken it right back up. They printed 4,400, 4,401 as I'm doing this. It's 9 a.m. Eastern time. So today, look, you got the 4,400 area. You've got resistance at the 20-day. You've got some higher lows down beneath. It's a mess. Okay, that's a technical term. This tape right now is a mess. It is very uncertain about what the next move is. And you got Fed speak out there. You've got other things going on that are weighing on it and pumping it in either direction. So I expect more whip today, more chop. When those inflections resolve, you're going to get some big moves. So once the 4,400 resolved yesterday at about 1 in the morning, finally went down and did this move to 71.75, which was the move I really thought the Bears needed to make. They needed to take out this low. This low just wasn't a good look for them because you basically had matching lows here. 78 quarters, 77.75. They took that out by 5-6 handles, but now they've given it back up. So it's very important that the Bears defend somewhere between here and 17. And ultimately, the Bears are not going anywhere if they can't take out the lows of the week. Now, maybe that's not today. Maybe that's early next week. But until that happens, you have to assume that we're going to see what we have seen so many other times, which is eventually the Bears let go of the rope. They're gone. They give up, and we lift back up towards all-time highs. Right now, under my rules, as a baseline proposition, we are in a sell rallies tape. We have closed below the daily mid-band. That was on Wednesday. We have maintained an entire Globex session below the 20-day. And we are here now for a second Globex session still below the daily mid-band. That's sell rallies. That's sell rallies. Be careful. You can buy the rallies. You can take profits. You can let runners work. But you have to be ready to jump off the train when it comes. At the same time, we really haven't seen a sustained sell rallies market since March and April of 2020. I mean, let's be real, right? So unless the world is theoretically ending in a massive everybody in their house pandemic type situation, the Bears have trouble sustaining downside price action. That's just reality. You may not like that. That may not comport with your view of the world. But let me be the first one to tell you that price doesn't give a shit. Okay? So if we take out 17, we're going back to 45 probably. 31, there's a 9-day as a way station. But right now, the Bears have a great opportunity. We're below the 9. We're below the 20. You got to deal with down here. And it's not some massive pullback. 44.76 to 43.47, I'm not going to get my slide rule out right now, but that's like 3 point something percent. That's not a lot. It's whatever. It's fine. Okay? Nobody's talking about some massive 5 or 10% correction. That seriously is not on the table until the bears look a hell of a lot better than they look right now. So this is a dip. So far it's getting bought. The bears have a chance to counteract that. We'll see. All right. Everybody have a fantastic day. Have a fantastic weekend. We had a really good training session yesterday in the private Facebook group. Come join it. Watch it. It's recorded over the weekend. 5 things you need to manage any trade, whether that's stocks, options, crypto, futures, anything. 5 things, talks about risk, entries, exits, all that fun stuff. I strongly suggest you come join the group. These concepts are universal. Come watch that video. It's the start of a very big training education launch for us, and get in on the ground floor because it's going to help you with your trading. All right. Be well, take care, trade them well. Talk to you Monday.